Hello guys, glad to have you on board again today. We do just as usual, and we'll start by the Bitcoin, having a look at the daily chart time frame without technical analysis, just to see how the price is reacting on the higher time frame, just taking care of the context basically. So we're still in a pretty much nonsense market regarding sine waves. Sine waves absolutely lost in here. But as I said, I think that bearish cycle has been triggering a little bit too early. I think this is where the cycle should have been triggering. So we should still be in a bearish cycle, but with a bullish momentum. And right now that momentum has been reversing to a dangerous pattern, which I'll call the momentum shake out, which means we were out of overbought pattern, on a very overstretched momentum straight to the ceiling value, and we went down to the bottom ceiling value, which means going from very high values to very low values in a straight line. Meaning we didn't get to any underlying oscillation in here. It was all the way up to all the way down, and this is what I call the shake-up pattern. I mean, you guys are shook up. They took you in, and now they're shaking the milkshake, and you're just right in here trying to figure out what's happening, and the market doesn't even know what to do itself, I think, right now. And generally, the market is doing some kind of range structure in here. But the fact that the momentum in here is still above the previous the previous resistance, which is now acting as a support and got testing the overlap level. And from what I can see, the momentum is really still oversold. It's still oversold, which has been making new low and new high on the same day yesterday. So today is going to be the decision candle if it managed to break either the high or the low of that candle. So as long as we remain inside that range, it's pure neutrality. But the day we'll manage to break either the high or the low will give us some kind of clues that the market might be about to reverse. Either keep on going to the downside and invalidating the bullish breakouts, or reversing to the bullish side and invalidating the momentum shakeout. And at the moment we will invalidate that shakeout pattern, generally the market is brutally reversing to the mean, which means the mid part of that shakeout is going there, and then it's going to try figuring out what's at play. So now if we go into the 2-hour chart time frame, that's exactly what we've been saying the days before. Is the fact that we have a big cluster in here, lots of resistances. We've got the now bearish, which this was a support area in here when we were back then forecasting the market was just consolidating in here. This would have been the bottom channel that we'll have tried to buy, and as you can see, the market tried to buy in here and then sold that level. So this is now a resistance, even though it was meant to be a support. So we've got heavy resistance with that trend channel in here. We've got that support area with sine wave and technical analysis showing some support in there. The market just broke it down in a straight line, not even pullbacking, which means we've got lots of bulls trapped in here and probably a lot of selling demand. So this is where the big cluster is. Take that entire area in here and lots of things will happen in there. And as you can see, lots of resistance near 7,400 and slightly the level above. So the question right now is whether we're going to whether this will act as a resistance or not. I think the market is obviously going to test that price, and this will be the game changer. If bears are in there and taking it over to make new lows afterwards, might be a danger for the bulls, and I myself will probably have to exit the bullish scenarios. We're probably and obviously going to have some bearish demand in here for the bulls who have been trapped in here and want to exit, or lower the expositions they have on cryptocurrencies. So probably going to have some bearish demand in here, and we'll see about that. I mean, if bearish demand is overcoming the bullish demand we had down here, then obviously we're going to have to make new lows, and that means the trend is probably bearish now. But if the bulls who've supported in here and bought the market are stronger than the selling demand in here, then we're going to break that selling demand and get to the next one, which I think is right here. And this is what I'd like to see. Going in here, working that price area a bit, and then just breaking it up. If we manage to do this, that's a really good sign, because we'll both reintegrate the daily trend line, which means if I'm zooming out, you'll see what I mean. This was the bearish trend line. Okay, we broke it up. I was really forecasting us to do it without a problem. So we've done that. but I thought we would buy the pullback, and we didn't. We just reintegrated, made a few candle closes below that level, and I hope right now we're going to have some daily candle close right above that level again. But that's requiring for us to test that area and maintaining the price over it. If for some reason we just go in there, finding bearish demand and retracing once again, I think danger is down the road, and I might have to get out. At least not necessarily entirely out, but I'll be too much into riskier assets, which means I'll have to reduce the leverage I've been putting. Especially in Ethereum, for example. If for some reasons Ethereum's were back to the support again in a few days from now, after rebouncing, that will be the red flag to me, which means I probably have to take at least 50% off the table, and probably a little bit more to just put the stop loss far beyond the current levels I've been putting it to. All right? Now moving to Ethereum, what we have in here is exactly what I was forecasting yesterday. It's pretty much amazing, because what I've been saying in here is the fact, not to you guys, I've been saying to Pascal, it's the guy who's helping me on a daily basis to answer your emails and things like that. And I said, I'll have a look at this, Pascal. What we have in here is basically like a copy-pasting strategy. I mean, they're creating a triangle, trying to break it down and fucking them up. Even though all the triangles in bearish trends are generally exited by the bottom, we're just fucking up the sellers in here and then taking some stop losses to get up. This is exactly what we've been doing. We've been breaking down the trend line, making a piercing line pattern, closing at the low, then bullish engulfing pattern, and now we're going up, and we've already broken up the trend line. So we'll see about that, if this pattern is still at play. But if it is, I mean, basically, look at this. We've been pretty much building that triangle perfectly, like an algorithm has been taking care of accumulating the resistances. And now we're above it. So we're going to see in 31 minutes if we manage to make a candle close like that, and I would pretty much be happy to see what's about to come next. Because if it's something like that, then we're good. Means that we're going to have to test that resistance, which is the exact same as we have forecasted on the Bitcoin, which means we'll have now a bottom in where bulls will have takeover, will have worked around the price area, the speculative area, which means if we go out of this right now, that's a good sign. Doesn't necessarily mean that we won't go back there again, but at least we'll have some levels to put some stop loss. We'll have some bottom to handle the risk management. Okay, remember that when you speculate and trying to buy a downtrend, you don't know where to put the stop loss. This is why you must never ever put leverage, because you don't know where to put the stop loss. So it means the market can keep on pushing to the downside, and you have to be able to absorb that volatility. Okay, this is the only reason why speculating cannot be done with leverage. Otherwise, you're just playing God and thinking that you will find the bottom even before the market itself did find that bottom. So it's really nonsense to think that way. So really don't do it. And the only way to speculate will ever and forever be doing it with low leverage and not trying to play gods. Okay, so that being said, anyway, moving on. So I would like to see how the market is about to react in here. Doesn't necessarily mean that we're going to copy pasting what's happened before. We could very well invalidate in here as well, try to trade stop loss if people have been putting too much stops in there. I think myself, I've been putting in validation alert, but once again, no stop loss in here. I don't want to see the market going there, and I don't want to see the market going down to break down that level. Okay, I want to see the market eventually going slightly lower to make another deeper and deeper low. That's possible. I wouldn't be an end of the world if we were just to go there. All I want is the market not to stay there for a while. Can be there, but I want to see volume demanding that price instantly. If we have to go there, I want to see a very nice pickup in volume and the market rapidly moving up. Okay, it's just triggering stop losses, bullish guys buying those stops, and the market rapidly retracing back. Okay, regarding the other crypto assets, I think basically it's not necessarily what I need to see. I clearly think Ethereum is the leader of altcoin right now, even though they are totally decorrelated right now. That means you're thinking that this is altcoin versus Bitcoin. I think this is just a mess. Which means if you're thinking a correlation way right now and trying to find some logic in the current movements, I think you're totally off the road. You just need to assess the fact that all those things are just barely noise right now. we have no correlation. It's just we're trying to test the resilience of some coins, testing the danger of some coins. I mean, having a look, do you really think something like that is comparable to this? It's nothing like a comparison in here. What we've done in here is just damn fucking noise. Okay, this is nothing you can compare. So if you've been trading either IOTA, Ripple, and things like that, and thinking that they all move together, you're wrong. They're just independent things, and you have to buy and sell accordingly. Which means I've been putting a tinier IOTA is the one I've been buying the least. So I'm not surprised to see this one going down. I'm not triggering anything like stop losses, but all I see in front of me right now is nothing that suggests I must put more money in there. So probably this is one of the scamming assets that were looking strong, at some volume, at some market cap, but apparently, as you can see, this one is not holding it. I mean, right now it's just bleeding capital again. Eventually, we might have some buyers. As you can see, we've got volume, so some people are trading those prices in the bullish side. And yes, we have some supports, but I don't want to put more money into IOTA anymore. What I see in here is not suggesting that asset being bullish. Instead, Ethereum is showing some fucking damn strength, which means doesn't necessarily mean Ethereum doesn't have the same outcome to come forward. We might have the same thing, a huge volatility to the downside in Ethereum, but what I see right now is the opposite. The market's just doing nothing and is trying to rebound. If for some reasons the Ethereum were about to rebound, that will show some very nice strength on that asset, strength that some other didn't have. I mean, Ripple has been breaking the support as well. Okay, so Ripple might be another scam. It's another one I've been buying. I just got twice the amount of IOTA into Ripple. I've got 250 euros into IOTA, 500 euros in Ripple. I've got 7,500 euros in Ethereum. So that lets you know the way I project myself into that market. I think Ethereum is damn strong. Doesn't necessarily mean that it will survive for sure. All I say is that this is the one I have the strongest signals on, the one I have the strongest confidence on. This is obviously the one I'm putting the more money on, but once again, speculative money, meaning 7,500 euros, it's just barely nothing to me. I have huge capital, and this is basically trading with a 0.2 leverage, or even lower than that. Okay, so this is nothing close to leverage trading in here. I don't have stop losses accordingly to that leverage, which means I'm pretty confident into trading without stop losses because I'm not going to lose that big if the market is going down. All I don't want to is the market to go down and stay down. If that was about to be the case, then I'll have problems. But I'm pretty much ready to absorb some downward volatility. I mean, if in an overnight session Ethereum was about to make minus 20% and plus 20% the day right after, I don't want to be stopped out. I'm just going to be buy and holding. So I'm prepared to eventually see some downward volatility on Ethereum. But if for some reasons this one were to go up without the bearish volatility, that will show some pretty damn strength on this one. And this is how I'd like to see things happening. Just going up without volatility on Ethereum. And if that's what the case, if that's the case, then you'll have pretty damn confidence. And you can be sure that whenever I get to buy and hold things, I won't buy Ripple, I won't buy IOTA, I will definitely buy Bitcoin and Ethereum. I think right now we're just testing solidity and resilience of investors into different blockchains. And I think right now, to me, it's clearly down Bitcoin and Ethereum's who are the damn strongest. But we'll see. It's still too early to forecast that. First, I want to see Ethereum rebounding out of its current support area. Now, out of cryptocurrencies and trying to figure out what's happening into the general and big stock market. Sorry, and yes, that's a big mess we're currently on, but I'll just get right to the point. Gold is not then breaking the support, and that might be a big problem, because this is something I've been talking to you guys about. The fact that if we were to go just here and fail to get into the lower boundaries of the gold, And worse than that, if we were to break down that fucking trend channel that we've been stuck into for a month right now into a stupid I've ever seen, that's the most stupid I've ever seen trend in years, just ongoing, not knowing why. People are just buying dollars, thinking that this is the safe haven that we need to put your money into, just because Wall Streets have been showing signs that this is where you should put your money. I mean, I've never seen something that dumb. It's just the market is showing you an open door, even though you have thousands of choices. Everyone is just piling himself into the same damn tiny room, which is the dollar. Like, the dollar was the only solution you had to put your money into trouble when heading down to troubles. I think that's obviously wrong, and I think that pattern is about to reverse, which means dollar is going to bleed capital, which is not going to be helpful for Wall Street, and going to be much more helpful for the gold and other safer assets, which means we've got a VIX currently at 11. We've got a gold currently holding its support and probably about to break a damn resistance for the first time in 4 damn months. I mean, this is not something, this is not a tiny thing. It's a big thing. If for some reasons gold were to retrace and break up the $1,200 and $20, that will be a real big game changer. Okay, it's obviously not the case at the moment, and obviously Wall Street will try to defend itself out of it. But if for some reasons this was to surrender, you know what's about to come. It means we try to break a support. We fail it, it becomes another support, and we're going to break resistances one by one afterwards. We've got all the targets to get to. Resistance means we're going to go there, break all those resistance one by one, and the previous resistance is going to be a support, just like it was the case in the previous trend. We've been going stupidly down for months, we're going to go stupidly up for months as well. Silver as well is showing some reversal pattern. US oil, I'm ready to short this shit. Not necessarily right now, but it's either this is a wave 1 and this is a wave 2 retracing. So if we go there, I'm obviously going to take a short entry. Otherwise, I'm just going to wait for an ABCWX ABC structure to go to the I level, in which I'll be ready to short. We've got strong resistance confluence in here. This is where I want to get the entry if this is what the price is offered to me. I mean, in that area, I'll start searching for potential bearish entries, which means right in there is the area I want to get short entries out of, upon signal only, or at a limit price if we go to the higher area, because the stop loss is going to be very cheap. That's how it is. So I'm watching closely for US oil, and as you can see, if US oil is about to go down, if gold is about to go up, do you really think the VIX can go to below 12 levels? I don't nearly think that's the case. So do you really think the Nasdaq is going to make new historical highs? I don't think so either. Do you think the SPX is going to do? I don't think so. So we have big troubles down the road. Everyone think this is going to be bullish, but I'm going to tell you something. I've been putting and hedging my risk regarding this pattern, which means I've been buying some Russell because I'm all in into risk areas. I mean, not all in, but I've been putting many scenarios are risk orientated, which means I want to see some damn risk on Wall Street. And if for some reasons Wall Street were just to flush out those risks once again, as it's been doing before many damn times, can do it once again. And if I'm wrong, it's going to cost me like probably more than 10% capital. And that's kind of a drawdown I don't really want to surrender to the market. So I want to take some gains on the opposite. So the way I see it, having a little bit of Russell might not necessarily be a bad choice, because if for some reasons the upside were what the market is about to do, I think the Russell will be the best vehicle to trade that, which means this is the one that has the clearest, strongest bullish demand. So we'll see about that. This is the only one I want, obviously, to eventually try to buy, because it's been making a triangle consolidation in here, go into the upside, and I think it's still, it might still require to go slightly higher. Not necessarily to the moon like that, but I think we might have some potential regarding the Russell, a potential that other assets doesn't necessarily have, but it really is like going to 4 or 5% out of the current prices. And I've been buying yesterday right on the out on the lows some Russell, and we'll see about that. I mean, I can be wrong, and I would love to be wrong and see all those damn shits going to the downside right now and just falling apart. That will be the best case scenario to me, because gold is going to explode and I'm going to take huge gains. But if for some reasons I were to be wrong, I want to take some money, and I decided to hedge myself out of the Russell, which seemed to be the best choice to me, taking care of small caps instead of just big names that Wall Street is trying to impose to you, like Apple, Amazon, things like that. Like, you need to buy those because those are the big guys, the too big to sell, the too big to fail, whatever shit they're trying to tell you. This is not going to work that way. It's obviously what they're trying to sell you, the more that they're probably going to be the game changer in the recession, which means if you put your money down there, you're going to be into heavy troubles. But you already know about that song. I've been singing it for multiple days. So this is the way I'm doing it. What's causing today's rebounds is obviously China, who's been trying to install a double bottom structure. So we'll see about that. But that's interesting, as we are in a technical area and it's been twice in here. I think we have decent odds to get into eventually a bullish signal into Shanghai Composite, which is an asset I will be buying as well. So I'm now bullish on Shanghai Composite. I've been buying the Russell, but I remain bearish, heavily bearish on the Nasdaq and the SPX. I remain bearish on the Euro stocks, remain bearish on the FTSE. I think those are nearly about to collapse, but it's just a matter of Wall Street. If either Wall Street is about to just buy out of no reason and it's going to create probably a bubble, or at least it will be at risk to create a bubble, so I don't want to be part of it. Or otherwise, if we don't, I remind you the scenarios. It's just right in here. We got all the scenarios regarding Wall Street. That's basically it. Okay, so Wall Street's got two options. Either we're just failing here and that's the end of the game, or other option, we get into this, and it's going to be grinding up slowly for a month, and I don't want to get myself in there. Okay, it's purely and simply this. I don't want to get into that scenario. So if that's what's about to come, I will just get out and wait patiently to get the big short entry. Okay? And if that's the case, it will simply require you to wait for probably an extended 2 to 3 months, and probably will have to short again in the latest quarter, in Q4 2018. So I think the big short is about to happen nearly, as you know, in terms of seasonality. You generally have a bullish September when you had a bullish summer, which leads me to believe that no matter what, and no matter how stupid those moves are, Wall Street is convinced that we have to go higher because of seasonality. And as we had a calm summer, we're going to have a nice and low volatile end of the year. This is what Wall Street is trying to sell you right now. I think first, it's not going to be the case, but not the timing. So don't sell right now. It might be too dangerous. Today is going to be the game changer. Either today is a bearish day, invalidating yesterday, or today is a good day. And if it's a good day, then I'll trigger stop losses and get out of XPX, Nasdaq, and things like that. I'm going to sell. I'm going to rebuy all I've been selling in Wall Street and just let them do their shit for an extended 2 to 3 month scenario, and then I'll get back in. And then that will be dangerous. But I'll let the SPX make its historical highs, selling some dreams to Wall Street. But I think this is the final move ever. And what we've been doing right now, as I said, is just trying to figure out what's at play. Either we're in range trading, and as you can see, this is not the case. We're making 3 candle closes on a daily basis on the SPX above the red area for 2 times, which means right now Wall Street wants the historical highs no matter what. It's nothing close to trying to finding the right pricings. It's just buying that damn shit to make historical highs. And as you can see, this is not how you're supposed to price markets. It's not how it's supposed to happen. So we'll let that shit making historical highs, just let them believe this is going to last long, but we'll have 2 options. Either a bearish market catalyst, unexpected thing is going to come out and the market will brutally collapse, and it's not going to be pretty, but you cannot anticipate this. because you don't know what the unexpected catalyst could be. That's the case. That's the thing. It must be unpredictable. So either something unpredictable is showing up and the market will brutally fail and collapse, but you cannot trade this by anticipation because you don't know how and when this will eventually trigger. Second option, you basically wait and you get to the big short. And whenever you have this, you just short and wait for 2 years to pick up the gains. That's how it is. You get into recession trading, you're just playing patience, and you're going to get huge gains in return because the SPX is probably going to bleed at least 30 to 40% capital. So that's how it is. And consider the Black Friday. You're going to have much better prices to buy instead of just buying the highs like stupid guys will do. So let it go. Don't try to fight. Just let Wall Street sell the damn shit and be patient. Okay? So we'll see about that, but today is going to be the last chance we have. It's either the techs are selling again, like selling Apple, selling Tesla, and they are bleeding capital again out, and we are failing. We're going to fail that resistance. So resistance is in here, okay? We take the moment we started to make higher upper shadow candle to the highest price. So we're right into the resistance, okay? So the question is, either we're going to take that resistance as one and get into bleeding capital to get to the support area, or there's just no resistance and we're going to take and act as a support above it. And this will be support until we get back in here, making the rebounds for stupid traders who will put the stop loss right here, and then this is where you get the big short trade. Okay? So act as the scenario. Put yourself into a plan, have a mindset, be prepared for the next move, and be smart enough to have the fact to assess the fact that right in here we've got multiple options, and trying to force the market one way is not going to be the way to do it. So really be patient, have multiple options, be prepared for each and every different option, and just trade accordingly. Right now, no one knows how it's going to play. Those who try to figure it out might just be do it speculatively, which means you don't play God, and if you're proven wrong, you just get out, get the stop loss out, and surrender to those who were right. That's how it is. It's one chance out of 3 possibilities. I've been picking the range one, I've been proven wrong. So I might give away the stop loss and let the stupid guys buying. And it's either going to be short term or very, very short term is something nasty show up. But in the meantime, I think they want to have the market top. So I'm just going to let them have it if we get to candle close like that. What we've made yesterday, we've been closing right at the high. So it's either today we keep on pushing, or either today we invalidate and make a close below that low. If that's option number 2, then I want to be short for sure. If that's option number 1, then I'll just let the market go. Okay, so today's candle close is going to be the game changer to me. If we close higher than yesterday's high, I mean, I'm not going to fight forever. I'm going to just surrender, give the stop losses, and wait to have further information. It's just being patient. I'll still be bearish, just to set things straight. I'm not buying this thing ever. I'm not going to buy forever. Now I'm buying at least 30% discount, which means if you want to buy, that's your problem. I just want to be patient to get good prices. If you absolutely want to buy right before the Black Friday, that's your problem. You're just going to have the same sweatshirt as I will. You just have paid it 30% higher pricings. At least, not to say probably 40 to 50% if things gets to be worse in the end. So we'll think. Well, see it that way. Do you really need that sweatshirt? Do you really want to pay it 60% higher pricings than what you could pay it in 2 or 3 days when the summer sales comes in, or when the Black Friday shows up? Think smart. Do you absolutely need to own some Apple, own some things like that? No, you don't. Be rational. You don't need that. People around you will tell you, oh, you didn't buy Apple. Have you seen it? Making historical highs, making $1 trillion. You have to have it. Fuck them. Do you really need? No, just tell them, okay, you fancy having your nice Apple stock. I will fancy taking your money when this will drop. Just tell him that way. That's how it is. You'll make more money patiently waiting and selling that shit instead of buying it right now because everyone think that they should have it. Okay? This is not how it works. This is just how the Bitcoin crashes have been putting itself into motion. So trade smart, don't make the same mistake. You know the drill. So that's basically it. Now the GBP/USD, I want to see that scenario invalidating again. We've been making a bottom, we've been closing at the low. I want to see a bullish engulfing pattern today, just like we done the last time. So I want to see some bullish candle right today on the GBP/USD. EURJPY is nicely going down, and I just don't want to see it going back to the resistance. So I don't want to see making a morning star pattern in here right on the potential support. I want to see the market making upper shadow candle and keep on going tomorrow. USD CNH, pretty nice. I want to see this one making a bearish engulfing and heading to the downside. As you can see, this is the reversal candle. We've been trying to invalidate my scenario, we failed it. So right now I want to see the market falling apart, which means the dollar is not in the good game right now, which is surprisingly the fact that we have either the SPX trying to chase the historical high and the dollar retracing. It's not a good sign. It means the yieldings will probably go down as well. So I don't know where the cash will come out of, but basically it's not good because gold might be trying to find a support, dollar might be finding a resistance and not a short-term resistance, and USD CNH may be just going down, the yen might be pulling up, because if you're having a look at this is not a bearish pattern, probably going to have some pullback again, but anyway, in the end, the yen is going to be brutally bullish, and this is not something that Wall Street will like. It means the money will get into safe havens, and they won't have anything to buy. They won't have the money to put prices to higher levels. So this is really kind of a mess right now. I mean, all the correlations have been putting down to ground as nothing is acting like it ever had. I mean, everything is just abnormal right now. It's like all we've been using for years is no longer at play. It's just the market is acting nonsense, like it's the algorithms who were deciding where the money should be put into at a very fast pace that even any human on Earth is able to understand. So it's kind of a wait-and-see approach, trying to figure out when those damn robots will stop trading. So we're kind of wait-and-see right now, and I think that's the best kind of approach. If you were wrong, just give away the stop loss, don't hold the trades, be patient, and wait for another timing to get to short if you were trading to the downside. I mean, right now, the bulls are trying to trigger something, and today is going to be the decision candle. So as you can see, gold is pulling up, but the equities are as well. So this is not a good sign. It means that we've got people trading and we've got people edging in the same time, which means we know that we're trying to climb, but we know we're taking more and more risk every time we're doing it, which is not a good sign. It means that this can surrender the gains pretty soon, which just any market catalyst can take down the market. We don't have any single catalyst today, any interesting catalyst, which means can come out of nowhere, geopolitical and things like that, which means it's a highly unpredictable, highly dangerous though, so don't put stocks. If you do buy, you can buy, I think, right now, but do it very tiny leverage, because it can reverse anytime without pre-signals. So now we get into the questions. Good, there's not that big of a question. So technicals keeps on being in the wrong direction on BTC because this is not a typical market. I think you're wrong. This is a market just like any market. It's trading like any other market using cycles and momentum, and I think this is just how any market works. Now, can't we realize that banks ruling since 15th century will ever allow cryptos to succeed? I think you're trying to rationalize a price, rationalize a market, and this is not how it works. It's just a matter of cycle, a matter of strength, a matter of bulls fighting bears. It's some tiny battles inside a big war, and no one knows who's going to win a war. It's just that right now the battles are run by the bears, but at some point I see some more strength in the bull side, but I don't think the war is over yet. Yes, that's possible that the only reason this market is still standing is the social movement that was created with it, like a religion. That's possible, but once again, you can kill tangible goods. You cannot kill ideas. I mean, as long as this idea is spread into people's minds, it has value and it has money. It means that to me, it will never ever worth zero again. Can be abandoned for some reasons and left over, but I mean, this is like playing God and trying to figure out what the future will be. This is not what we do here, and this is not what I do. I'm just here trying to assess the risks, finding risk-reward ratio decently, fitting the strategy to give me positive statistical return to getting more gains than the losses I could make in a long run. And this is all I care about. Playing God, right, wrong, oh, don't give a damn. And I tried. I hope you would have figured it out by then, because I'm repeating that same thing over and over again. I'm no magician, I'm no god, I don't give a damn about being right, being wrong, and the guys who tell me you're right or you're wrong, I don't give a shit. All I care about is finding something that fits my strategy, and I will play anytime I'll see this. Thanks for suggesting the VIX topic, and for short term, if at all, the guy selling at ETF is probably going to die during the recession. Point well made. Yes, the problem is that when you have liquidity distortion, it's generally when things go right, when things do right, we don't see the problems, because this is basically a systematic problem, and the fact that systematic problems is nothing that we care about when things do well. It's just something that will blow to your face when things will get worse. And I never said that ETFs will obviously be a problem in the short term. All I said is that when things will get dirty, and it will obviously be the case, because what goes up must go down. When you breathe in, you breathe out. That's how it works. That's not just how stupid Wall Street make you think that this is going to go up forever. It never works that way. The market is like a human being. It's like it's like a living thing. Do you really think you can breathe in forever? If you do it, you just explode at the end. I mean, at some point you can even make some air breathing in. So you have to breathe the damn out, and this is how it works. So if people are trying to sell you glitters and things like that, you know it's not going to work like that. So yeah, I'm gonna go a little bit faster. So I think you got my point anyway. I'm repeating that same shit every day for weeks right now. When you concerned about the clear engulfing, it's engulf with a U, not engulf like the golf. It's engulfing pattern on BTC weekly charts. Yes, that's probable, but I mean, who knows? If you're trading just the candle pattern, the candlestick pattern, I've never seen a damn trader using just that to trade. We're using multiple things, cycles and things like that. I think we're searching for bullish signals. So if you're just trying to find bearish engulfing patterns and things like that, I think you're just wrong. Okay, think cycle. We're trying to find bulls. We're not trying to find bears. So which means all I care is a bullish engulfing potential pattern, not a bearish one. Now, taking the answer of Absar, is BTC bull run over? As if you check on the daily time frame, it's not bearish. I don't think it is. As you can see, momentum is just showing signs of shakeout, which means we're just putting you guys into the washing machine and making it turn as fast as we can, just to wash your heads. And this is not how you react. Well, how you react to this is just you hold on patiently, putting some levels in which you should get out when you're taking too much risk. And as long as you remain inside the risk boundaries, you just hold on. It's not. It's a market trying to go up or down by just taking down stop losses. So when it's the case, you just don't want to give yours. You just want to patiently wait, having rational choices, rational risk management. And as long as your risk management can stay in and you can stay up, you just do it. Okay, so I don't know what the outcome will be. I could be wrong and I could have just taken a bigger stop loss than expected. But from what I can see right now, I don't see that much risk. So I'd rather like to stay in, as I think as there's still a possible gain out of that scenario. Whenever I see no reasons to get a gain, I'll just get out. You can be sure of this. But I think my trade can very well give me a gain in the end, even right now. So I'm patiently staying in, as the money management can hold, can support the current prices, and I can even take another 5 to 10% drop. I wouldn't necessarily be the end of the world to me. That would be a really bad sign, and I'll probably have to exit any pullback afterwards. But for now, we haven't. So you don't speculate on what you like to see. You just create a mindset of what could be the things and just let the market do it its own way. It's generally not going to be the way you predicted. You have a look at me. When I'm making my my analysis and making my Bitcoin projections, generally see me putting things like that. This is just a mental projections. The market generally doesn't plot it that way. It's just that this helps me projecting myself into future. Okay, all I basically care about is when I bought here, to the market to go there and gave a damn gain. If we got there before, who gives a shit? I mean, the guy who's been buying in here will make just more profits than I will, but all I care about is making the damn profits and haven't risked too much in between. I think risking this to get this is decently into risk management. I'll just let the market go. Whenever we'll make more losses than the gain I could make by getting in there, I've been entering right here. Okay, so just assess the fact that I could take it. I'm going to take the lowest possibility. Okay, lowest possibility is a 16% approximate gain. Been entering slightly higher, so it's not 16% gain. But basically, take something like that, 15% gain returning on price. Now, as long as we don't make 15% loss, I'm still in a positive ratio, which means I've been risking less than the gain I've been making. And then there's another parameter, which is leverage. The more money you've been putting into an asset, the sharper that risk-reward ratio must be. If you're trading with some money, you don't want to risk 1 to 1. You don't want to risk 1 to lose to get 1. You just want to risk 1 to lose to get 3 to 4 to gain on the opposite scenario. Because you've been putting convictions, you've been putting leverage, you've been taking risks. And the more risks you take, the better the risk-reward ratio should be. Okay? That's a big difference. I knew I was trading low confidence when I bought my Bitcoins, so I knew I shouldn't put much money in there just to let some room for the price to work out. Okay, and I still think that we're going to go higher and we're going to go to the prices in which I'll take my profits and probably take my gains. We'll see what the future will tell us, but I'm still having confidence in the way that we'll more likely getting to my taking profits than my stop loss. All right? So we'll see what the future will tell. Once again, I'm doing this 100% with transparency. I'm trading with you each and every damn day, so you know what the hell I'm doing on a day-to-day basis. I can do more transparency, and you know how I think. I'm like showing you each and every block that builds my thinkings and my decisions. I can't do any better than that. I mean, that doesn't mean I'll be right, I'll be wrong. Just try to get to how I think, because this is what trader does. They are thinking differently than the noobs and the beginners. When you're beginning, you're generally thinking the wrong way. And I want just you guys to learn from me to get into thinking the right way, and at least as a compatible way to trade. Okay? That's all I'm doing right here. I'm not just spitting words out there. I'm just trying to let you think and let you understand what's really at play in my head when I'm doing my daily job. And I think not a lot of people out there are just doing this. Okay? So instead of just teaching you bullshit and things you might hear each and every day elsewhere, I'm just trying to teach you something that only me can give you straightforward. Okay? It's just pure application of a trading strategy on a day-to-day basis, and normally at that point you should see that I'm doing the damn same thing each and every day. I'm not changing anything. Okay? So that being said, I'm going to leave you guys and wish you a good trade.